Welcome to the Daily Insights That Matter. We begin today's DITM by talking about the Australian Parliament's approval of a free trade agreement with India. Now, after 10 years of negotiations, India and Australia had finally agreed to an interim economic cooperation and trade agreement on the 2nd of April 2022. But the Australian Parliament had not ratified the Small Trade Agreement Pact as it had been delayed because of a new government taking power in Australia. The free trade agreement between Australia and India has now finally been approved by the Australian Parliament. Once implemented, the trade agreement is expected to provide duty-free access to the Australian market for over 6,000 broad sectors in India, including textiles, leather, furniture, jewelry, and machinery. Under the pact, Australia is offering zero duty access to India for about 96.4% of the exports by value from day one. This covers many products that currently attract close to 4 to 5% customs duty in Australia. Now, as you can see from the graph on your screen, in FY22, our exports and imports to and from Australia nearly doubled in 1 year. Now, exports to Australia as a percentage of all Indian exports have increased to 1.96%, and the imports as a percentage of all Indian imports have increased to 2.74%. These numbers could only rise once the FTA between the two nations is coming into effect. India is looking to increase its trade with Australia to $45 to $50 billion annually in the next 5 years. It will be India's first free trade agreement with a developed country in more than a decade after the Comprehensive Economic Partnership which was signed with Japan in 2011. Now, the incorporation of companies has steadily declined since May this year. This comes at a time when various agencies have lowered their economic growth forecasts for India. According to data from the Ministry of Corporate Affairs, over 15,900 companies were incorporated in April this year, which rose to 16,500 in the month of May and then gradually declined every month to 10,725 in the month of October. The total authorized capital of all companies incorporated in a month has also declined from about 2,230 crores in May to 1,263 crores in October. Authorized capital, by the way, is the maximum amount of the capital for which shares can be issued by the company to its shareholders. Additionally, only a small number of foreign entity branches or liaison offices have been set up in India every month. Now, the incorporation of companies is an important indicator as it indicates investment intent or reorganization of the companies. The actual commencement of the business, however, may depend on multiple other factors as such. Now, the decline may not be because of any regulatory changes as such, but may be reflective of the general sentiment in the economy. In September, the RBI had cut India's growth forecast to 7% from its earlier forecast of 7.2%, citing headwinds from extended geopolitical tension, tightening global financial conditions, and a possible decline in the overall external component of aggregate demand due to downside risks to collective growth. Now, that said, the declining trend in company registrations is reflective of the broader overall trend of a global slowdown combined with massive layoffs in the tech space. The funding winter for startups combined with large-scale layoffs has significantly reduced the risk appetite of first-time founders as well, resulting in fewer new entrepreneurial ventures. Added holidays in the festive season in the month of October may also have played a role in the decline in company registrations. So what does all of this news mean for you? Australia holds a crucial strategic position for India and would offer the largest market to Indian businesses in the Pacific region. Broadly speaking, if done right, a comprehensive FTA with Australia will be beneficial to India. This will therefore have an indirect positive impact on you. Slowing economic growth prospects, fear of a global recession coupled with the prolonged funding winter amidst layoffs in the tech space are all impacting the company registrations in the economy. This will therefore have an indirect negative impact on you for time being. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.